Hello everyone, it's Friday, December 26, and today we will analyze the charts for the euro and the British pound to identify potential market trends. Currently, the market remains relatively unchanged. Demand for risky assets is subdued, which is not surprising given the Christmas holidays. On the other hand, the US stock market has reached a new one-year high, benefiting from a traditional Santa Claus rally. However, this term does not apply to the currency market, where the US dollar is struggling but still managing to address the downward pressure it is facing. The lack of significant economic data on Wednesday and today suggests that we won't see strong market fluctuations, so technical indicators will take precedence. The direction of the market will be primarily guided by technical analysis. Since today is Friday, the last trading day of the week, and the new year is approaching, we do not anticipate any significant directional moves in the market. Turning to technical analysis, the 1-hour EUR USD chart indicates that a false breakout at 1.1781, which is the midpoint of the current sideways range, could trigger a buy signal, pushing the euro up to 1807. While a break in consolidation above these levels is unlikely, if it does occur, it would open the door to 1.1840, where it would be prudent to consider short positions on the rebound, aiming for a move of 25-30 pips. Short entries at 1.1807 should be set on a false breakout, which would bring the euro back to 1781, the center of the range. A break below these levels would set the stage for a decline to 1.1754, with the potential for a bearish correction extending down to 1729. At this level, I would recommend looking for long positions on a rebound, targeting a move of 20-25 pips. Long positions at 1754 and 1781 should only be considered following a false breakout. Regarding the British pound, it continues to trade within a sideways range. On Wednesday, the GBP USD pair reached a one-month high, but current trading conditions have been increasing range-bound activity with notably low market volatility. A false breakout at 1.3502 could generate a sell signal, potentially dragging sterling down to 1.3471. A break below this level will push the pair further down to 34.42, where I would recommend considering long positions on a rebound, anticipating a move of 20-25 pips. Long entries at 34.71, the lower boundary of the sideways range, should be set following a false breakout. Alternatively, if the price breaks through and consolidates above 35.02, the midpoint of the range, the pound could again upside momentum, climbing to 35.31, where sellers are likely to step in. At this level, I would advise going short on the false breakout, especially since the British currency remains in a strong bullish trend. Short positions on the rebound could be considered around 1.3561, targeting an intraday correction of 25-30 pips. Good luck to everyone, wishing you a great weekend.